It's my pleasure to welcome you to the Thames Valley Chamber of Commerce Quarterly Economic Survey Output event. As we gather today to discuss the latest survey results, we'll find ourselves at a crucial juncture for British business and the broader economy. The recent general election has not only reshaped the political landscape, but also set the stage for significant economic and policy developments that will influence business confidence and investment decisions in the coming months and years. The quarterly economic survey conducted by the British Chamber of Commerce is a vital barometer of the UK's economic health. It captures the sentiments and experience of business across the various sectors, providing an invaluable snapshot to the current economic climate and future expectations. Our survey results today will offer insights into how business in the Thames Valley and beyond reacted to the pre-election, shedding lights on key issues such as investment intentions, workforce dynamics, and overall business confidence. The survey results will highlight the current states of business confidence and confidence levels at a critical indicator of future economic performance. Today's event is not just reviewing numbers and statistics, it's about understanding the broader implication of the results for our business community. The insights we gain from the quarterly economic service will help us identify both the challenges we need to address and the opportunities we can seize in this post-election era. As we move forward, the Thames Valley Chamber of Commerce remains committed to supporting our members, advocating for pro-business policies and fostering a thriving economic environment. Everybody, I'm welcome today for the first time our new sponsors, James Cooper Creston, and thank them for their support, which is invaluable at this time. For those who haven't perhaps dealt with James Cooper Creston, they are professional service providers offering tax and accountancy services to support you, your business, and yourselves, more importantly. Sue Staunton is the joint managing partner, and Sue manages a portfolio of clients covering a broad spectrum of industries and is well known in the market for working with technology-based companies to help them maximize their potential. Welcome, Sue.
Thank you.
We also welcome, back again, Stuart Morrison from the British Chamber of Commerce to help us understand the national sentiment. I'll first of all hand over to Stuart Morrison from the British Chamber of Commerce.
Hi Tim, that's great. Thank you very much for your introduction, and yeah, great to be back at the Thames Valley Chamber. Shame to not be in Reading itself this time round, but I'm sure I'll be back down at some point soon. I am just going to share my screen if that's possible.
Yeah, fear not, Stuart, we'll get you back. Perfect.
Can everyone see that? Is that okay?
Yes, indeed. Yep.
I'll do full screen. Hopefully that's easier. So great. Yeah, as Tim said, my name is Stuart Morrison from the British Chambers of Commerce, here to talk you through the national picture of the QES, so what we're seeing across the whole UK in terms of the data we've collected in Q2 2024. I suppose, although Tim has already done a great job of introducing some aspects, I thought I would do a quick introduction to the QES itself, what this survey is. It's the largest independent survey of business sentiment in the UK. We collect responses from members of Chambers of Commerce across the whole UK. So while this is something that's conducted by the British Chambers of Commerce nationally, the heart of it really is the work done by local chambers like Tim in Thames Valley, but across the whole UK, collecting data from members, asking them about their sales, cash flow, investment, all the sorts of things we're going to talk through today. And for this quarter, we've collected around 5,000 responses, and you can see the makeup of those businesses there. It's a high proportion of exporters, around 24% manufacturing businesses, 76% services, and the vast majority, about 91%, coming from SMEs. And just to sort of put this data in a moment in time, the fieldwork took place between the 13th of May and the 10th of June. So that's broadly within the period of time after or just slightly before, and then into the period of the general election being called, but prior to the results being known. Although I don't really think that makes a great deal of difference to the results, just to kind of put it into its context. So we're going to go through the slides now, looking at quite a lot of different data points, and I'll try to move through them relatively quickly, but talk not just about the specific data points themselves, but kind of the broader narrative, how we feel things are moving within the economy. To start off with, I have just a short summary slide. And I suppose the most important thing, and what I hope is the main impression that you might take away from this presentation, is just to say that for this quarter, the results look relatively positive. And for those who've attended sessions we've done before, like this or in person, sometimes I feel like I can be bring a lot of gloom to the conversation about how the economy is looking. The good news is this time around, actually, we're seeing some positive signs, all within the context of what has been a very challenging few years. But for a lot of the indicators, they seem to be moving in the right direction. Price expectation, which we've talked about a lot before, is going in the right way. We're seeing sales, particularly in the manufacturing sector, improve, and concern amongst businesses for things like inflation and labor costs is starting to subside slightly. Where we're not seeing that much of a change is when it comes to investments, and we'll talk in a little bit more detail about that when we get to that slide. The first thing we'll talk about is sales, both domestic and export. On the left-hand side, you can see the chart that looks at those domestic sales, and the red line there represents service sector, black line manufacturing, and you can see that they're both moving in an upwards direction, which is exactly what we like to see. Particularly for the black line, which represents manufacturers, you can see that actually it's been quite a sharp uptick from last quarter, whereas when it comes to services, it is going upwards, but moving in a much more gradual way. And you can see a similar thing when we look at export sales. The black line, which represents manufacturers, does tend to be a little bit more volatile. I can move around a little bit more, but you can see on both charts, the red line for services moving upwards, and the black line for manufacturers, which had been slightly lower, now moving up to roughly about the same level as services. So in terms of measures across the board, export sales and domestic sales, what we're seeing is gradual improvements and roughly back to what we might have seen prior to the pandemic. A slightly less positive story, and one that if I had shown you this slide at any point over the last few years, really, it would have looked broadly the same. This slide looks at the question that we asked businesses over the past 3 months: have your investment plans for plant, machinery, and equipment increased, decreased, or remained constant? And really, what we've seen across all sectors, which is the bar that's kind of highlighted in that blue circle, is that around 25% are reporting an increase, 60% remaining constant, and about 14% a decrease, which is pretty much the same kind of figures as we've seen quarter on quarter for the past few years. So really what we're not seeing is any significant improvement to that at the overall level. But if we dig a little bit deeper and look below the surface, and what you can see is sector by sector, there is a lot of variation, and some sectors are reporting quite a significant increase in their investment plans, particularly if we look there at the transport, logistics, and storage sector, where around 42% are saying that they have in fact increased their investment plans. Looking at the indicator about cash flow, so over the last 3 months, has your cash flow increased, decreased, remained the same? What we're seeing is slightly more firms reporting an increase compared to a decrease. It's a pretty slim margin, so 28% saying increase, 24% saying decrease, but that is a slight improvement on what we saw last quarter. And once again, to reiterate the point we made on the last slide, it does vary quite a bit between sector, particularly if you look at the top of that chart, professional services, 32% of firms in that sector saying that cash flow has increased over the last 3 months, quite different to the more B2C type firms, so hospitality, catering, retail. Those types of businesses are much more likely to report a decrease in cash flow and are generally looking at much tighter margins when it comes to cash flow. The next few slides, or certainly this slide anyway, looks at recruitment. So this has been a big topic whenever I've come to Thames Valley and spoken to members there, or in fact, when I go to any part of the country and talk to businesses about the challenges they're facing. The thing that always comes up is recruitment difficulty and the hardships they face finding the staff they need to grow. And so this question is particularly important, and it's actually two questions. On the left-hand side, we ask, first of all, have you attempted to recruit staff over the past 3 months? And what we see is pretty much the same proportion there or thereabouts each quarter. So this quarter, it's 59%, which is down a little bit on the 62 the previous quarter. But if you trace it back, into 2022, you can see that it's hovered at or around that 60% mark over that period, and hasn't varied too much. Where we have seen more variation is in the second question. So of those businesses that say that they have tried to recruit over the last 3 months, we ask them, have you faced any difficulty in doing so? And what we see is about 74% saying that yes, we've tried to recruit and we found it difficult to do so. Now, if you look back over the previous quarters in this chart, you can see there is a bit of variation. So at the start of the year, so Q1 2024, we saw that drop off quite a bit, down to 66%. And we're very interested at that point to say, okay, is this going to be an ongoing trend? Have these recruitment difficulties started to ease sort of substantially? And then this quarter, the data reveals that actually it is a bit more volatile, and it does seem to be going up and down, sort of quarter by quarter. So what we really are interested then is in the general trend. So rather than looking at the quarter by quarter figure, which seems to be relatively volatile, we look at the trend over time. And if we go back to Q4 2022, which was the peak of this period of recruitment difficulties, you can see that it's up to 82%. So 82% of firms that tried to recruit finding it difficult, which was really a record high. And from that point onwards, although it's kind of fluctuated quarter by quarter, it has gradually decreased and down to 74% this quarter. So the overall trend is going in the right direction, even if it does seem to vary quite a bit between quarters. And this is another chart that looks at price expectations. So asking firms over the next 2 months, do they expect the price of their good or service to increase or decrease? And what we've presented here is the net balance between those two figures. We've also split it up, as we saw earlier, between manufacturers and between services in red, manufacturers in black. And this tells a story really of what we've been seeing, or what's been quite, a big headline within the economy over the last couple of years, which was a sharp and dramatic increase in the proportion of firms expecting their prices to go up. That will come as no surprise. That's well known, and we saw the inflation figures, really go through the roof in 2022, 23. Following that, and you can see that the lines start to then go back down almost as steeply as they went up. So quite a sharp and sustained drop in the proportion of firms expecting their prices to increase up until the end of last year, where that trend started to slightly reverse. So you can see following that steep decline in price expectation, there was a bit of a hiccup really, and the last 2 quarters we saw the proportion of firms expecting the prices to go up actually slightly increase again, which was a bit concerning. We'd really felt like inflation was kind of moving in one direction that had seemed to sort of go backwards over the last couple of quarters. But thankfully, what we've seen this quarter is a return to that downward trend. So once again, the proportion of firms expecting the price increases has started to decline again, and we'll hopefully, when we see that over the next few quarters, see that downward trend continue. And the reasons for that downward trend really can be seen in the bar chart on the right-hand side. So here is a list of the areas that businesses are experiencing pressure to raise their prices from. And you can see the sources of that cost pressure previously had been things like raw materials, utilities, energy costs, fuel, and that sort of thing. Those have dropped off substantially, down from well over half, 60-70% of firms listing these as cost pressures, down now to 38% for raw materials, 48% for utilities, and that's across the vast majority of sectors listed there. Where we haven't seen a drop off in cost pressure is when we look at labor costs. So that's the bar in red on these bar charts, and you can see that that's now the highest for every sector listed there. Labor costs is the most significant cost pressure businesses are facing, and has been for a few quarters now. There is variation, different types of sectors, for example, manufacturing firms more likely to cite raw materials, but generally speaking, it is that labour costs that is the largest cost pressure for most of the businesses surveyed here. What's I suppose a summation of all that? We're seeing declining cost pressures, some of the things that have been causing issues for businesses starting to subside, sales going up, exports improving. What that's really meant is an increase in business confidence. So quarter on quarter, the increase has been small. The proportion of firms saying that they expect their businesses turnover to improve has creeped up, maybe 1-2% each quarter. But if you trace that back to the start of 2023, what you can actually see is a quite pronounced upward trend. So from 52% in the start of 2023 to this quarter, 58%. So well over half, a majority of firms saying that they expect their business confidence to improve over the next, their business turnover to improve over the next 12 months. Just a couple of slides to go. This is a question with regards to concerns. So what businesses worried about? Which of the following factors are more of a concern to your business than they were 3 months ago? And the ones flagged there are inflation and interest rates. Inflation, if we look back to 2022, you can see a huge proportion of firms were really worried about inflation. That's now dropped off substantially, so down to 49% of firms, which is still high, especially by historic standards, but nowhere near as high as it had been just a few years ago. Interest rates as well, as a concern listed by businesses, started to decline, even though interest rates themselves haven't come down. What I read that as is businesses with the expectation now that interest rates aren't going to go up anymore, and that probably at some point this year we're going to see a cut. So they're still worried about them, and interest rates are still causing an issue for business, but there's no longer that anticipation that they could go up and up and up, sort of unchecked. So generally speaking, concerns compared to where we were a few years ago have started to ease, have started to subside, which is perhaps partly behind why those levels of business confidence have been creeping up over the end of last year and into this year. So just coming to the end of the presentation here, we have a question that we ask businesses about the challenges and the opportunities that they expect to see over the next year or so. And the similar things as you might expect start to come up. I've pulled out some examples, which hopefully might be interesting. These are by no means all of the comments that we receive, but a nice subsection of things and showing really the detail and the quality of response we get. Businesses talking about costs, shipping costs, insurance costs. Lots of comments talking about the national living wage and the effect that's had on their overall wage bill, which feeds into that stat we looked at about labour costs earlier. Business talking about interest rates, as you might expect. And then finally, I suppose an indication of the period of time that this fieldwork took place in. There's lots of businesses talking about the election, what they expect to see afterwards, what their kind of what opportunities and challenges they expect to see as a result of the election outcome, which we do now know, but we didn't at the time when this data was collected. So that's a very quick run through of what is a very large and complicated survey, but I'll pass back to Tim and stop sharing my screen, I think.
Stuart, thank you very much indeed, and we will return to you in a short while. Now I'd like to hand over to Sue Staunton from James Cooper Creston to perhaps talk about the local scene compared to Stuart's national scene. Sue, over to your good self.
Thanks very much, Tim. Well, the Thames Valley is one of the most successful economies in Europe. It's an IP-rich, innovative business community, and it's forecast as a region to be the highest growth region in the UK for 2024 to 2026, with an expected gross value added growth of 2.4% across that period. And that expected success is very much mirrored, I think, in the results of the quarterly economic survey for the last quarter, specifically looking at this as a region as opposed to a national basis, which is what Stuart's just talked about. This survey shows a business community in the Thames Valley exhibiting confidence in their markets, which is at a markedly higher level than in the national survey, with some 72% of the companies that have been polled in the Thames Valley, believing that their revenues are going to increase compared with 58% nationally. Confidence is, however, being tempered with an acknowledgement of the challenges being faced, particularly in recruitment of staff, which again Stuart referred to. And these companies do need the staff and do need that recruitment in order to capitalise on the economic improvements that they're expecting, with some 60% of the companies expecting that to be difficult. But it is noteworthy that Thames Valley respondents do have more confidence about their ability to recruit, nonetheless, compared with that national picture. And the quarter also saw nearly half of the Thames Valley businesses surveyed reporting their sales and orders had increased, with about 25% reporting an increase in overseas orders, coming on similar reported levels of increases in the previous quarter. That's encouraging news for Thames Valley prosperity. And I think, as a professional working within the Thames Valley, the survey results are very much mirroring what we're seeing on the ground. A general air of confidence amongst businesses, even though they're not expecting it necessarily to be an easy period. So why have they got that confidence? Well, there's a lot of business activity in the area. Major construction and infrastructure projects being carried out linked to business growth and development. So the site at Harwell, for example, and major business and science parks going up in and near to Oxford, as well as elsewhere down the Thames Valley corridor. A number of earlier stage businesses have been raising significant rounds of investment, with some record sums coming into the Thames Valley. And of course, business success breeds success of itself. And the area is also fortunate in attracting high quality staff, which helps to bolster that success. But whilst generally the story in our region is one very much of prosperity, we are also seeing pockets of concern. These are notably businesses which are very over leveraged and struggling to make ends meet, and particularly struggling to meet payment schedules as a result of interest rate levels. Often they are the businesses that took advantage of the COVID protection funding opportunities. With the cost of living crisis, we're also seeing many businesses in the hospitality industry and more luxury end of retail struggling. And I'm sure we've all seen the number of closed pubs and other hospitality venues. With the recent election results, though, it's going to be interesting to see what respondents will say in the next quarter's results, and whether and how the election does impact upon the views of those who will be polled in the survey.
Thank you very much, Sue. And perhaps we'll get everyone back together. It's very interesting, that investment piece that you both talked about. I've sensed this year, talking to businesses, that perhaps what has held them back, I think, Sue, you referred to the leveraging of borrowing, and that not so much the ability to borrow, but the cost of borrowing within their existing books, if that makes sense. And I think that area, I think, is something where, in terms of the sentiment survey and the feeling better, I mean, I guess I don't know what the views are about interest rates, but that seems to be the factor that will make the immediate difference as we go through the year. So whether you've seen that with highly leveraged books where they've actually had to stop whether it's recruitment, etc.
And it's not just recruitment. I mean, I think it's very interesting today to hear the comments from the new Chancellor of the Exchequer about encouraging much more building work, and this being a great way towards growth for the economy. But I was just reflecting on that, because most of the construction companies in the UK actually have to borrow quite significantly on projects in order to get to build before they get the return on them. And the critical determinant of profitability for a number of them, certainly the smaller end, is going to be their ability to service the interest on the loans that they have to take out.
Yeah, and I suppose the other way around. I suppose it's the commitments from the financial institution to ease that pressure,
Yeah.
As the year goes on, whether it's having to restructure borrowing or passing those cost reductions on when possible.
I think that's very true, and I think if we keep thinking about the construction industry, just because it's been mentioned today, I think we have to also think about the length of time it's going to take companies to actually build out and then get the return on the construction that they've done. So, you know, one of the thoughts that had been talked about today was the review of the planning system, and that's often the thing that really does hold up the timing on the completion of construction projects.
Yeah, I hear that probably most days as even the most straightforward piece of planning ends up in bureaucracy for a very long time rather than simple times. And I think at that point, a lot of business decisions are just shelved because not necessarily the lack of patience is probably almost a boredom level halfway through these planning applications. Stuart, do you get that general comment as well?
Yeah, absolutely. I think improvements or a more efficient planning system is one of the British Chamber's key asks, and it was great to hear that from the new Chancellor today. I agree with the sentiments about interest rates, particularly in the construction sector that Sue mentioned as well. We actually heard that directly from some construction firms in the survey, saying that, especially smaller ones, saying that interest rates are really holding back the amount that they're able to borrow, and that's affecting their ability to compete with larger construction firms, which can do so more easily. So yeah, I think that'll be an important thing later this year. I think in terms of, you know, changes from this quarter to next quarter with a new government in, I think the reality is probably that'll be too soon to tell. You know, some of these issues that we're talking about are really deep rooted in the economy and will take time to unpick. But what can change, you know, in a relatively short time is the sentiment side of things. Businesses feeling more confident, some stability within government, I think could be helpful and can encourage investments if they're not expecting to see, you know, big changes. So I think that's something we'll look for in next quarter, even if the more fundamental changes might take a bit more time.
I suspect there will be I think there's been a psychological everybody sitting on their hands for the last few months. And I think maybe a few checkbooks might come out during the summer months to change, because I think, I mean, Sue, you used that, the general air of confidence. And, you know, are your clients, you know, do you think they would sense that air of confidence as we perhaps look forward to interest rate cuts and perhaps whatever the new government tells us in the coming months?
I think it's critically dependent on what the government tells us over the next few months, but more widely, I think that at the moment we're certainly seeing a general air of optimism in businesses, and I think that's, if they can see sight of inflation coming down and interest rates coming down as well, then that's the sort of critical determinants. Also, I mean, we have to remember that Thames Valley is host to a lot of IP rich and innovative companies, and they're not so dependent perhaps on borrowing, but more dependent on equity investment coming into them. And anything that can make the UK a more attractive place to invest is going to be very good news for those businesses too.
And I suppose that has an eye on the Brexit negotiations, which have been indicated that they will perhaps re-enter into in some way to get more favourable terms for our exporting businesses as well.
I think it's partly it. I also think it's about being a good place for research and development to be carried out. And over the last few years, certainly, there's been quite a number of businesses that have exited the UK or have carried out significant parts of their work overseas simply because of more beneficial environments. So I think if there's something that can be done in that arena, particularly around the tech and innovative companies, then that also would be very helpful.
Because they did offer some R&D tax relief, didn't they? But then it got slightly difficult to actually get it, I think, was that.
Well, I mean, R&D tax relief actually, I think I'm right in saying, was a big success of the Blair government, and was generally felt to be one of the most successful innovations from a tax point of view in terms of stimulating growth and the economy. But over the last few years, it's been changed quite a bit to the point where it's making it more challenging for companies, certainly the smaller businesses, to expend the money to secure those tax reliefs. So I think anything around that would be very much welcomed.
If both of you were advising businesses now to, in terms of taking action that were in their control, you know, I'm sort of seeing potentially the sort of cost of energy being something that can be sought after rather than waiting for political pressures. I think we've seen that market particularly fickle, and is sort of gone up and down like a rocket. But and that seems to have been another sort of an area which has caused businesses to see their cash flow stop almost because of the costs have doubled and trebled in some sort. But maybe it's right now to take advantage of that sort of stability where we are now, to add that bottom end in their book to keep it a bit more easy going. What do you think of those ones? Anything else that sort of actions businesses should perhaps look at in the coming months? Haven't got any thoughts?
Yeah, I think if you're a business, I wouldn't wait for the government to act. That'll certainly take a bit of time. But in terms of things that can happen immediately, we've talked a lot on this call about skills shortages and recruitment difficulties. I think it's great for businesses to be proactive about that, to put together a skills plan if they don't already have one, to look at the recruitment that they're currently doing. Is there pools of people that they're not looking at to recruit? Can they offer more flexible terms to recruit different types of people? But having that written down in a formal skills plan can be a great way to be proactive and try to deal with that.
And Sue, any final sentiment for you?
Yeah, I think my advice for companies would be to retain as much flexibility as possible, and perhaps scenario plan the different things that could be outcomes over the next few years for your company, so that you know exactly how you would deal with those eventualities when they happen.
Perfect. Anyone will add any comments to what we've spoken about?
I suppose the only other advice I would give to businesses would be to speak to their local chamber of commerce, to reach out and join that network of like-minded businesses.
I like your thinking, Stuart. And then obviously after they've been in to see us, it should be to go down to James Cooper Creston to aid some investment advice at the same time. What do you reckon? Good teamwork.
Thanks so much, Tim.
And on that note, I guess I would sum up, with the new government in place, policy directions are expected to shift, influencing everything from taxation, regulation, international trade, and infrastructure development. For business, undertaking these changes and anticipating their impacts is crucial for planning and risk management. Domestic policies aimed at fostering economic growth and innovation will be in the spotlight. Initiatives relating to digital infrastructure, green energy, and skills development are expected to play a significant role in shaping the business environment. The government's commitment to levelling up regional economies also presents prospects for us here in the Thames Valley, a region known for its vibrant tech community and strong economic performance. Overall, if we look at business conditions in the region, business confidence has increased, fewer firms expecting to increase prices, concern about external factors continues to decline, while on the downside, most firms are still not increasing investment. But overall, then we are seeing green shoots of recovery, but they are but green shoots. And as ever, in the Thames Valley, we're a very resilient business community. My thanks to Sue and James Cooper Creston for supporting the event today and ongoingly each quarter. And my continued thanks to Stuart and the British Chamber of Commerce for bringing along the national view, which remains so important to us. The next survey period starts on the 19th of August. So on that day, it is important that you have your say and feedback into that survey. I'll let everybody go and wish you all a very good day and see you hopefully very soon. Thank you so much.